The markets are down again. Social media is in panic mode. Recession coming. Elections will crash everything. Pull out before it's too late. Sounds similar? Here is the truth. Markets will always react to news. Elections, wars, budgets, global events. Every headline creates noise. But your investment goals, they are not 10 days away. They are 10 years away. Maybe more. So ask yourself, would you abandon a 10-year career plan just because of a bad week at work? No, right? Then why react to short-term volatility with long-term money? Investing isn't about dodging dips. It's about riding through them with patience and discipline. Some of the best market days often come right after the worst ones. And those who stayed invested benefited the most. So the next time headlines scream panic, pause. Take a breath. Look at your goals. Stick to your plan. Because wealth isn't built by reacting. It's built by staying. Ignore the noise. Trust the plan. Long-term goals need long-term thinking.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.